welcome back to the Deep Dive. So today we're jumping into something pretty significant, actually. It's a development that could, well, fundamentally change how digital dollars interact with, say, your local bank. Our mission today really is to unpack this strategic alliance. It's between two key players, Metallicus and InvestiFi. We're focusing squarely on how they're integrating compliant stablecoins directly into the existing infrastructure, credit unions, community banks.
Yeah, this is a real signal moment. And it's important because we're not talking about some experimental crypto thing here. This is about convergence. For years, the whole regulatory conversation around stablecoins has focused on one thing: full reserves, proper compliance, and this collaboration seems to deliver that. It makes these institution-backed digital dollars accessible, not just for the huge Wall Street firms, but for institutions of all sizes. It basically takes the stability you expect from a traditional bank and puts it onto, well, a modern blockchain.
Okay, right. We need to get into the specifics, though. Our goal here is to really dissect the roles. What's InvestiFi doing? What's Metallicus bringing? And then, probably most importantly, define what this term fully reserved digital dollar actually means for you, the listener, the person banking locally.
Exactly. It's kind of the meeting point of, let's say, high-speed utility and regulatory trust.
So let's start with the access point then, InvestiFi. They come into this already, deeply plugged into the financial system, right? The sources highlight they've got over 15 digital banking and banking core integrations already established. Now, just for the listener, when they say banking core integration, what does that practically mean? What's the experience?
Okay, good question. Think of the banking core as the central nervous system of a bank or credit union. It's the main ledger, right?
Yeah.
It processes your paycheck, handles mortgages, tracks your debit card swipes, all that stuff. So when InvestiFi says they're integrated into the core, it means they're not just, linking externally or scraping data. They are built right into that fundamental system. And that's crucial, really, because it allows for seamless instant verification.
Right, seamless. And the sources do back that up. They point out InvestiFi was actually the first company back in 2023 to pull off a real-time crypto to USD conversion using that critical core connection.
Yeah.
So that's the foundation.
Okay.
But here's my question then. If InvestiFi already had all that connectivity, the 15 plus integrations, what was missing? What does Metallicus bring that InvestiFi didn't already have? Isn't adding a whole new blockchain just, more complexity?
That's a really sharp question. The answer lies in the difference between, say, trading something and actually issuing it. InvestiFi handles the access, right, the conversion layer, getting in and out. But for a credit union to offer its own institution-backed stablecoin, a digital dollar, they can stand behind and say, yes, we fully reserve this. They need the secure infrastructure. They need the tools to actually mint and burn that specific digital asset and do it compliantly. And that's where Metallicus comes in.
Ah, okay. So Metallicus is providing the manufacturing capability, the factory floor.
Precisely. Yeah, that's a good way to put it. Metallicus is the core developer of the Metal blockchain. Their whole specialty is building compliant blockchain infrastructure, specifically tailored for financial institutions. Gives InvestiFi's network all those banks and credit unions the power to deliver natively integrated digital asset services. We're talking cryptos, stablecoins, maybe even securities down the line, all accessible right there in the familiar online or mobile banking app, not some third-party website you get shunted off to. Metallicus provides those secure, permissioned rails for actually issuing the assets.
That natively integrated part feels really key. So you don't leave your trusted, regulated bank app and suddenly feel like you're in the Wild West.
Okay. And because of this alliance, InvestiFi is broadening its utility quite a bit. They can now let account holders seamlessly convert, it says, any stablecoin into dollars and back again nearly instantly. They're not just locked into one specific digital dollar.
Exactly. It maximizes liquidity utility for the consumer. But the real game changer here, I think, is what the institution itself is offering, which, transitions us perfectly to the core product. Let's define these institution-backed stablecoins. We keep using this phrase, fully reserved digital dollar. Help us break that down. What makes it different from, the cash sitting in my checking account right now?
Right. This is maybe the most crucial detail for listeners to grasp. See, when you have money in a standard checking account, that money is part of fractional reserve banking. The bank doesn't hold every single dollar in cash. It lends most of it out. That's how banking works, fundamentally. Your stability, your guarantee, comes from things like FDIC insurance and regulatory oversight. It's sort of an off-chain promise, a liability managed traditionally.
Okay, right.
Makes sense. This institution-backed digital dollar is different. It's explicitly defined as fully reserved. That means the participating bank or credit union must hold a one-to-one liquid reserve for every single digital dollar they issue onto the blockchain. The liability is managed right there on-chain. It offers a level of transparency and immediate reserve verification that traditional banking it can't match. We've all seen headlines, right, about stablecoin wobbles, often because reserves were questionable. This model aims to remove that doubt entirely by linking the digital dollar directly to a regulated local institution with a transparent, fully liquid reserve backing it up.
That transparency point, the on-chain verification, that seems like the critical regulatory distinction. Okay, now let's get into the tech backbone. The thing that makes this whole fully reserved process compliant. Metallicus provides the infrastructure. Specifically, it mentions two parts: the metal layer 0 and the XPR network layer 1. Can you maybe give us a quick analogy just to clarify those layers for everyone?
Sure, absolutely. Think of this whole setup like a super secure highway system, but one built only for regulated financial vehicles like banks and credit unions. The metal layer 0 is that foundational security layer. It's the secure highway itself, you could say. It connects all the regulated players and makes sure everyone is who they say they are, handles identity permissioning. Then the XPR network layer 1 is like a specific service lane or maybe a dedicated ledger on that highway. It's built for executing the transactions and actually housing those bank-specific digital dollars. So layer 1 is where the actual minting, the burning, and the holding of the institution's own stablecoins happen.
Got it. So layer 0 is the secure perimeter, ensuring only the right players are on the network. And layer 1 is where the action happens, the instant transactions. Why is it so essential for compliance that they use this specific setup, this proprietary layer 0, layer 1 thing? Why not just run the stablecoin on, I don't know, Ethereum or something?
Yeah, that's a fair question. It really comes down to control and predictability and compliance, of course. For a regulated bank to issue its own currency, even a digital one, it needs a permissioned environment. It needs control. They have to ensure that the whole process, creating the digital dollar, the minting, and destroying it when it's converted back to regular dollars, the burning, it's completely controlled, auditable, under regulatory scrutiny. Public blockchains, well, they just don't offer that level of built-in compliance control and guaranteed settlement finality. Not in the way a permissioned, dedicated infrastructure like this does. This system is designed from the ground up specifically to meet banking standards, not necessarily crypto standards.
I see. So it's about building a kind of walled garden, but for compliance reasons?
Yeah.
And this whole engine, this whole process is then channeled through InvestiFi's platform, sitting right inside the bank's existing mobile app, which makes it operationally simple for the local bank itself.
Exactly right. Metallicus is the engine, you could say. InvestiFi is the operational distributor, the dashboard, the connection point that plugs that engine into the bank's existing plumbing. This shared model means community banks don't suddenly need to become, expert blockchain developers overnight.
Okay, so we've pretty much established how they built it, but the really big question is why? Why should, say, a local credit union in Ohio or Florida spend resources on this? What's the strategic for these smaller financial institutions?
Well, it really boils down to competition and maybe competitive fairness. Marshall Hanner, who's the CEO of Metallicus, he really emphasized this point. The mission is about democratizing access to this tech, making stablecoins accessible to financial institutions of all sizes, not just the giants. Look, the existential threat for a lot of these community banks and credit unions is that these huge third-party crypto platforms, fintech apps, they're constantly trying to peel away their younger, more digitally native customers. So by offering a streamlined, trustworthy, natively integrated digital asset experience in-house, these local institutions can fight back. They retain control, they stay relevant.
Yeah, that makes sense. It lets the local bank compete with the big crypto exchanges or payment apps, but with that added layer of trust and regulation that customers already expect from their bank. And the sources are careful to mention interoperability, too. This infrastructure isn't isolated. It's built to connect fully with major networks like Bitcoin and Ethereum.
Oh, absolutely. Interoperability is a non-negotiable if this is going to be useful. An institution-backed stablecoin isn't much good if it's just trapped on its own little network, right? It needs to be able to move freely across the major crypto networks, payment networks. That's how it fulfills the promise of being a truly useful digital dollar.
Okay, now let's bring in the benefits highlighted by InvestiFi's CEO, Kian Sareshte. Their platform already had this unique funds flow, letting people invest straight from their checking accounts. By adding Metallicus's tools, what new, practical, maybe user-facing features get unlocked? This is where we need that kind of aha moment for the listener.
Right. This is where programmable finance starts to show its real, well, disruptive potential. We're talking about benefits that go beyond just, faster payments. The Metallicus infrastructure enables secure, programmable features, things like instant settlements and much enhanced treasury management. So for a consumer, what could that mean? Potentially near instant loan approvals based on real-time collateral checks, or maybe automated micro-lending features that were just impossible with the old slow settlement systems. And for, say, a small business banking with that credit union, it could mean moving large sums of money, treasury funds, instantly and securely, 2047, not waiting 3 days for an ACH transfer to finally settle.
Wait, hang on. Let me make sure I'm getting that consumer benefit right.
Yeah.
Are we talking about moving beyond just fast payments to services that are fundamentally quicker because the currency itself is programmable, because it settles instantly on this blockchain?
Exactly. That's the core idea. It completely eliminates the settlement risk and the latency that's just inherent in our traditional financial systems. And the beauty of this partnership, the way it's structured, is that the community bank gets all these advanced high-speed capabilities, instant settlements, programmable money without needing to, hire an army of blockchain engineers. That operational burden is essentially handled by InvestiFi and Metallicus working together.
That really does sound like the strategic advantage. Minimal operational lift for maximum technological gain. And this collaboration, it expands Metallicus's ecosystem, bringing in more fintechs, more CUSOs, those are the specialized credit union service organizations, all focused on keeping that regulatory integrity while building out this new infrastructure. It seems really clear they're prioritizing compliance as the ultimate differentiator here.
Yeah, absolutely. What this whole alliance really signals, I think, is the explicit unification of what used to be three separate areas: digital assets, traditional payments, and investments. Now they're bringing it all under a single, integrated, compliant framework and delivering it through the banking channels people already know and trust. They're trying to standardize how digital currency gets delivered safely.
This has been, well, a really insightful deep dive. It's a specific alliance, yes, but with potentially huge impact. The tech is complex under the hood, but the potential outcome seems pretty straightforward. A more secure, faster, institution-backed digital dollar.
Yeah, the final synthesis is pretty much that. They're building, or helping banks build, the next generation of financial infrastructure. One where the trust you have in your local regulated bank is combined with the speed and efficiency of a purpose-built, compliant blockchain.
So the big question we'll leave you with is this: what does this all mean for you? If your local credit union or your community bank can now offer a digital dollar that's fully backed by their own reserves, that settles instantly, that's right there in your mobile banking app, how does that change how you think about the stability, the usefulness of digital currency in your everyday life? What new financial opportunities might this compliant, unified framework create for savings, payments, maybe even future loans? That's something to think about.